Hello guys, welcome back. This is Osmosis FX and this is week two. This is week two of May, and this week one was amazing. Yeah, we had non-farm payroll on the employment change on Friday, which was yeah, which was amazing. Came out negative as expected. So week one of May is gone. So this was the fourth week of April slash week one of May. So let's go into the second week of May, which is this week. So second week of May, what are the things we have? Monday is free, Tuesday free, Wednesday only 6:01, Friday free. Wow. Thursday rather. Thursday we have 6:01. Wow. So it's only Friday evening. So well, a lot of people are not going to be buying the XY next week. So the XY is going to dump a little more next week because there's no strong information about the XY. There's no strong news that it's going to probably put the XY in a lockdown. Not really. So we're actually going to have a little move of the XY, but we have card news on Friday, which will also affect the XY, and we have premium consumer sentiment also, which will also affect. These two will really shake the XY, and probably this on Thursday. I believe Thursday and employment claims. Okay, so we have employment claim and bond auctions. But GU has a lot and EU has a lot. So this week we are going to just leave the XY to just be rallying around because the XY might correct for some while. So now let's go into the XY, and presently this is the 4-hour. So let's just go down to weekly because I spot something on the weekly, and I would like you guys to have a view of what I spot on the weekly. Remember, we are trying to come back to this zone where we are flipping downward, and price just made some strange reversal. So we have an evening star reversal. Price took out previous week high, then drop and took out previous week low. So the expectation now is this: the price should, if I see from this auction, we've been following what the price is doing on this auction. We impulse, we correct, we impulse, we correct, we impulse. We are following the trend of we are following the trace rather of an uptrend. We impulsed, we corrected, we impulsed. Now we're expecting a correction. Now from my fib, this is my fib entry level, and this is the last demand. They have a liquidity for the demand. There's some liquidity for the demand there. So this is the last person here. This is the liquidity that must be taken before we push price up. So if this liquidity must be taken, then price must come deep into this zone. So if price comes deep into the zone, we have a lot of possibilities of price taking out this zone. We have a lot of possibility of price taking out this zone. So this should be 2 in almost. Meanwhile, we have also liquidity below this demand. So, but I still feel this demand has a lot to play because price has already done its job. Yes, price has done its job. Price has done its job here. Yeah. Also. So the next phase is to have this guy here. This is the next man standing. So this is the next man standing. So we are retracing back to take out these two highs. Because according to this trend from this weekly demand, when price came into it, we have a change of character. We took out this. Let's not stop on this. Yeah, there was a supply here though. Yes, there was a supply here. We took out that supply. And we move to the next supply. This is where the interaction change. We're supposed to take the supply first. But we take the supply out. We went to the next supply. We didn't close inside the next supply. We just closed with wicks. And we return back with full candle inside our demand and pushed. So we are mostly interacting here. We're just using here as a retracement. So same thing applies there. You can see from here, price closed below these candles here. It started here. So after that, we have a big information retracement candle. So we are retracing. So if you retrace, we are coming into this weekly demand here. Why are we coming into this weekly? Because this is the last leg that broke this high. This is the last leg that broke this high. So in this last leg that broke this high, the demand sponsoring this breakout structure is simple. It's just this is rally, base, rally. We have a base drop, then we have a base, rally, base, rally. Okay, so we have rally, base, rally. This is supposed to be a continuation. It's supposed to be a continuation, but the main push started from here and it cleaned out this before dropping. So we have something like this. We have price like this, and we have push to break out this, create a liquidity and stretch. So we have this taken. So price already took this high before this retracement. So because of that, this retracement is liquidity because a lot of people will be there. A lot of people will be here trying to buy from here. Meanwhile, I will be waiting at the extreme. I'll be waiting at the extreme because I know these people here will be swept. So I'll wait for confirmation. Confirmation move like this. Here we will have a reaction, no lie. We have a reaction and we'll probably create a liquidity also. Then we retrace back to the supply. We retrace back to the supply, then we push further into this zone before we can be on the next. So same thing is working in here, especially from here we have a drop, rally based rally. So we kept the liquidity here for price to sweep and push higher. So I'm already waiting for this setup, because if you go down to daily now, on daily, let me turn this into this daily. Okay. Alright, so this is our view. So you can see on daily we already have the stretch. This is the low, this is the high, lower, higher low, higher high. So we're expecting some higher lows in this range. Higher lows in this range, then higher high. Okay. So the last demand that we have is this demand here. That's the last demand. And we also have a demand here. Let me take one of this. We have a demand there that we have a sweep. So while we take out this, tap into this as stretch. So we might have some people who think when price step out of this trend, price is actually price is actually ready to sell. Meanwhile, this is the main stretch, is this stretch. So I'll probably just take this out. Well, let me leave it, because it does help me. So we could have a tap into this move, and also that we tap into this deep extreme. So I prefer this deep extreme price to come to a wick here, and we should see a push. So I think that's that for DXY. So let's go down to 4 hours. So in 4 hour, what do we have? We have a liquidity sweep and we have a retracement chalk. So we have an unmitigated supply here. Price came, tapped into some few supply here, sold, break, BMS. More so, to me, once we have this chalk, it is a normal thing to retrace, but that is not the proper retracement. We expect that move. This is just a one move on a higher time frame. But on a lower time frame, we have reversal, reversal, reversal. So this chalk is just this move, meaning this is just the move for this chalk. Bam. But on a lower time frame, you can see that we have retracement back into some supply, tap, tap into some supply again, tap. When we head into this demand, we have a reaction from the last sweep and change of character. And immediately price came back into the demand and poof, it bought into our supply. Immediately we have a reversal straight. You can see how tactical it is. They have a reversal from that place straight down. And we have an unmitigated demand here. So if the buy leg is still going to continue, then this demand should hold. But what do we have? This demand didn't hold. This demand reacted in this zone and gave us some Judas candle. Let me zoom in so we can see what I'm talking about. So we have, when price came in here, it didn't close below, but it already broke this demand. So that's number one, that this demand has been violated. Now we now see that price is You know, see the price came down, really landed here and show a sign of bullish intent. You can see we see sign of bullish intent in here. Wow. So expectation is price to go up and take out this high. But what the price? The price went up and we saw a sudden lift drop. The sudden lift drop back down, confirming that Judas picked us up and fell us down. So the Judas candle here is this last month here that shows signs that we are ready to go, and this is the industrial. Also, this candle sweep liquidity, sweep all these highs. You can see them. We sweep all these high, and what do we have? We have a change. We also have a change here. We have a change of a break of market structure. Okay. We have a change here. Background. Here we have a sweep. We have a sweep here. We have a sweep. Good. So we have a sweep here. We have a break of structure. We have liquidity waiting here. So liquidity build here. So what do we have? We have a SPY, which is a supply here. We have another SPY created in this flip. So this is just a flip zone, and inside it created something amazing because it's a flip zone. So you need to just be observant of this. So inside this flip zone here, we have a demand taking ton supply. So who is responsible? This guy took out all the sweep. We had the BMS, we have the liquidity grab. So we are coming back for this guy to continue this sell-off. So this is where we are presently, and because of the fact that I spot this as a weekly liquidity, so I put my stop, I put my target on that liquidity. That's my liquidity. That's the target I have for that liquidity. So I'm having another entry here from DXY. So here. So I'll look for USD pair to sell that correlates with this formation. You know, some are not correlating, some are a little bit different. So I'll look for something that's correlating with this zone. Good. So okay. So my next supply will be the sweep. So the sweep man here is my next supply entry, and the target still remains this liquidity here. So if I see this 50 pips number, at least we should have about, let's go down to 40 pips. Okay, so touch that guy. Lock everybody up, lock them up, and let them do it now. So this is my expectation, is to see price correct into the zone, sweep liquidity, change character, fair value gap, and boom! So I'm expecting some reaction there. So this is my expectation for next week. So we might have a slow, what will I call it here? A slow move here. the price will continue to rearrange itself, because this is a stretch and this is the only supply created. So the one here, price is not expected to come in. For price to come in, you should just take out this JJ. So this is the let's look at the premium and discounted from this zone to this zone. So you can see that this is the equilibrium, and from this equilibrium here we have the discounted price to sell. So price is still in a very good position to sell. So good. We are good to go, good to go, good to go. If I use my feed might not give me my zone. Why? Because this is the flip zone, so not a direct supply created. Yeah, that's what you can see. This is my OTE 0.7, 0.7, 0.9. This zone is my OTE, so price may not come deep into the zone for me. And sometimes price might. So, but I feel like this is the supply created, and this is where industry, big fund, hedge funds, this is where they want to sell from, because they just calculated this flip and they're expecting it to come back here. So this is where I'm expecting them to see the sell from. Alright, that's that on the XY for this week, guys. Do like, subscribe to the channel, and drop your comments. Thank you, guys. See you next week.